Us. In this video, I just wanted to share with everyone what I'm looking when it comes to the SPY, the SPY, and why I think the almighty 20 EMA it's calling for a new stock market high during summer 2021. And you see so far exactly how I build it up. And it does look that we are about to break to the highs. The idea is how you can easily spot these opportunities. When everyone is talking about market crash, when everyone goes out on CNBC talking about inflation, you have good old baby Buffett saying, well, you have to be concerned about inflation and blah, blah, jackety, jackety, jackety. That's not true. We're in a bull market. This is year one of the bull market. Now, everyone is complaining because it's no longer 2020 when you were just buying whatever. For example, you were buying Penn National Gaming for $5 and then you were selling it for $30, $50 2 months later. It's a little bit different. Plus volatility dried up. So what do? You do the next best thing, which is just understanding the market and play accordingly. For that, you need a little bit of skills. So that's what we offer at the Profit Flow Group, understanding the market. So let's dive into what is happening. The way it looks is every time we have a dip against the 20 EMA, you have an opportunity to buy. That's what it is. So it looks very simple, but it requires a little bit more practice because you need to measure sort of how deep it will be for then you have to have an opportunity. The point is that we're in the doors of breaking the SPY previous high. That requires a lot of money. So just give you an idea how much money has been building up this whole bull market for us to continue into new highs. So we know we have the previous high. We just need to break out, and then our new target will be 441 at least in the SPY, which is the S&P 500 index that we use to track whatever is happening in that particular US index. Now, the idea is, let's see how it looks without everything. I'm gonna just take this. There you go. You don't really know what to do. It all looks the same. We're on the daily chart. Now, if you add the 20 EMA, there you go, almighty. It gives you a roadmap, what to do and when to do it. So for example, you have the big drop. This is the big drop from COVID-19. That's fine. After that big drop, every time price dips under the almighty 20 EMA, it will give you a strong opportunity. Everyone is calling the end of the recovery right there, May. Everyone is scared. Guess what? That gives you 17% upside. Then again, it dips. It gives you a short-term opportunity, 6%. Dips again, then it finds support at the 20 EMA. That's 9.6%. Support gets to a top, 12%. And here's where you have to start paying attention, how to measure potential drawdowns or potential retracement. Remember that if you want something to go up, it's not going to go to the moon like Dogecoin or anything like that. It needs to pick up some liquidity. The professional, they have to step in, buy, so you have a continuation. Then after minus 9.50%, you have another 10%. Then it dips again. You see, minus 8.3%. And then you go a little bit all the way up, 17%. We're in the middle of December. And then you continue. The most important part is for you to notice where are the levels and how deep it will correct before it goes into the next push up, okay? Now, what we need to know is what it's doing now. 7%, you have a dip, 5%. This dip is 3%. And again, when everyone is calling inflation, everything is going to the trash again, nothing is happening, and there you go. So the question is how far this time will go. In some instances, the market has go as high as 17%, 7%, 8%. So let's call you go up 10%. Not even 10% will be something up like this. But if you have something around 8%, with the breakout strategy that I was sharing with you, will set the stage to go all the way up to 441. So let's say we go up another 8% during summer 2021. Why I'm sharing this with you? First, we're in the bull market. Every single dip, especially the one in March, this one, March, why they were so painful is because volatility is dry. That's why a lot of options traders are not making the money they are expecting. Okay? So there's a little bit of idea now that you have. You need to buy when the market is dipping. The most important as well is for you to focus that these are necessary for it to continue higher. All you need to do is use the almighty 20 EMA. Now, I want you to take a look at the description of this video. There's a link. If you want to understand exactly how you are going to maximize these 8%, because 8% buying the index is not going to make you wealthy. There's a lot of stories that ETF are going to make you a lot of money. That's not true. It used to be that. Not anymore, because we had a very fast market recovery. The economy is not there yet. So that means you have an opportunity. But as you can see, every time we have a little bit of this, everyone starts screaming, crying, and yakety, complaining. Why? Again, no volatility. So you need to be very smart in how you position yourself to maximize this next upper leg. So if you want to know how I do that, join the Profit Flow group. I explain exactly on different ideas. Not every single stock will just pop. Money tends to rotate. It's called rotation. So it goes from one sector. For example, I have said this before. The Qs, they did really well for 10 years. So are you going to keep making money in technology? Not really. You will make some, but not a lot. So I'm just going to take this out. Let me go to the daily chart. If you're looking at monthly, let's take a look at monthly. There you go. So you have strong 10 years. Look at this. The dip during the great financial crisis, that was 2008, all the way to COVID. Qs did really well. About 733%. That's technology. And although it will continue to move higher, your chances to make money is based on the rotation. So the S&P 500 may do a little bit better this year. The dips are less aggressive like the ones you will find in the Qs. That's the NASDAQ. So you want to position yourself. The most important and the key message between using, because you need to apply a little bit of technical analysis for you to have a sense where to buy in. Now, the trick to the whole equation is, if it's going up, do I want to buy shares on stocks, or do I want to use the most effective, not the best, but the most effective instrument to maximize any push higher? That's what we want to do. And that's what I do at the Profit Flow group. As I said, go to the description of this video. There's a link for my broadcast with Dustin Allen Pass, CEO of Market Traders Daily. I want you to listen and pay attention, because I will explain something that you never heard before. SDF, Statistical Disruptive Flow. That will give you the knife, the hammer that you need to beat the market in this decade. Because if you think you're going to beat the market by just buying shares, you're heavily mistaken. So pay attention again. There's a link. Go ahead. Don't waste time. Listen and watch closely the entire thing. You're going to love it. There's a lot of examples in how we can really squeeze the market. I believe, based on the almighty 20 EMA, there's a new high coming up, but it's not only knowing, it's about executing. And if you want changing your life, it's time for massive execution as well. And you can do that with options. Of course, in one of the most regulated and liquid market in the planet, which is the US stock market. So waste no more time. Go directly and watch the broadcast. So far, I can tell you, there's another leg coming up. We might dip a little bit, maybe support in the 20 EMA, maybe one more dip. Don't cry, don't be scared, just position yourself and get ready, because this is just year one in this bull market. I see you in the next video. Us!